news. Crude palm oil is one of the most essential commodities on this planet. Did you take a bath this morning? I hope you did. If you did and you use soap, that is one of the derivatives of crude palm oil. If you had bread and margarine, that is one of the derivatives of crude palm oil. There is so much there. CardinalStone has a new report out. Oil palm, they're talking about prices being elevated. Let's look at the top 10 producers of crude palm oil on planet Earth. According to the U.S. Department of Agriculture, you got Indonesia there leading the way, 46.5 million tons, 58% of global production. Malaysia, second place. Thailand, third. Colombia, fourth. Nigeria is in fifth place. Nigeria is the largest producer of crude palm oil on the African continent. Unfortunately, we are not able to meet domestic demand. So joining us, deep dive into their report. We'll also talk about global trends and also Nigeria. Kayode Eseyin, he's the lead consumer goods and agriculture sector at CardinalStone Research to talk about this now. Good morning to you. Thanks so much for joining us.
Thank you.
Great stuff. So I enjoyed the report, very informative. You're saying that, I think let's start with the globe now, that we're going to see elevated crude palm oil prices for 2025. What's the trigger for that? Why will prices be rising?
So if you check across history, say for the past 5 recent history, and even if you go as far back as you like, the 3 main drivers of CPO prices have been what we have seen in terms of demand. Global demand has continued to rise due to, number one, the ever-increasing population, and then as well as the fact that CPO, like you said, it's one very essential commodity that finds its usage across several industries. In terms of food, it's used in chocolate manufacturing, it's used in margarine, and quite a number of other uses there. Also, the pharmaceutical industry relies heavily on it, and then also industrial applications include detergents and many other uses. So essentially, demand for CPO has always been very, very robust as long as purchasing power and population continues to rise. But if you look at the supply side of things, that's where things would get really interesting this year. And that's why we're expecting CPO prices to remain elevated for the most part of the first half of the year. But second half is when we start to see some essentially new kids of coming back on the block, namely the supply of sunflower oil and soybean oil, which are 2 essential similar substitutes for in the vegetable oil industry. They essentially serve the same purposes that palm oil serves in many cases. For soybean oil, over the past 2-3 years, we have seen issues in terms of weather conditions and drought conditions taking a large chunk of supply from the Americas, particularly Brazil and Argentina. And so we are starting to see, I think, from around late last year, improved weather conditions. And so that means that very soon some of those supply would hit the market. But we don't see it coming now, especially because the harvest season for those products is more or less the second half of the year. And so when we enter that stage in H2 this year, we might start to see prices. And then also, if you look at the Russia-Ukraine crisis, Russia and Ukraine are more or less the largest suppliers of sunflower oil. Yeah. And if you recall, there were a host of tariffs imposed on Russian exports, essentially in response to the invasion. And it's starting to look like we are seeing a resolution in that space. And though that's still more or less uncertain, but depending on what happens there, we might also see, aside from soybean oil, sunflower oil also hitting the market. And so it's looking like the defying gravity stands that palm oil has enjoyed for the past 5 years might start to wane just because of these 2 reasons.
Okay. You've got a chart with respect to projected import volumes. I think you've got India and China. Yes. So is this, if you're projecting an increase in import volumes, and these are, I guess, 2 of the largest importers. Yes. Is that enough to support prices?
Absolutely. Yeah. So India and China has been one of the main drivers of palm oil demand across the globe, again, across the same historical forecast horizon. And if you recall, this past 5 years is also the same period in which we saw India emerge as one of the fifth largest economy in the world. And they also have a population size of about 1 billion. When you add about China's 1 billion, that's roughly a third of the global population. And they're not just having population, they also have a very large industrial base, a very large consumer market. Purchasing power there is also very, very robust. And all of this just goes to show that there is enough demand to suck up as much palm oil as they need. And that's why we are forecasting increased demand from those 2 countries. And we think, yes, it's part of the main factors why we still think CPO prices would continue to remain elevated. Because,
so I think we had some data coming out from China. I think in particularly industrial production data, which, what was that? Yeah, 5.9% year on year. Estimates were 5.3. Retail sales up, fixed asset investment. Anyway, the more encouraging data coming out of China, at least as far as industrial outputs is concerned, that bodes well for their demand for for crude palm oil, yeah?
Yes. Just like I mentioned, the robust economy would continue to support demand from that space.
Okay. Now, you have another chart. Now, we'll go back to the supply side. That's why we had that top 10 there with India, Malaysia, and Thailand leading the way. You have another chart here. Talk to us about this. I think I am seeing an increase in production, right? So you may have touched on this already, but what about the supply conditions for Indonesia and Malaysia in particular? I think you mentioned that in your report.
So supply conditions in this country continue to remain positive. Both countries have essentially taken steps to take huge advantage of the large arable land that they have, and they have continued to benefit from driving growth in their agriculture and by extension their palm oil industry. But in particular, I think one major drag which we have seen recently on supply has been Indonesia. Indonesia supplies about 58% of global CPU supply. Is the drive by the country to essentially win itself off the volatile energy market through its biodiesel mandate, which essentially means that a large chunk or a percentage of the crude palm oil that they are producing is now being used and converted into biodiesel locally, just to ensure that they are a more energy efficient. They don't have to rely on energy exports.
So there's an impact there.
There's an impact there.
Supplies,
on supply, and if you check over the past 5 to 10 years, they have been gradually increasing the percentage of their local supply that they are driving into biodiesel, and that has meant that supply is not as much as we would like it to be, but supply continues to increase there just because of the historical investments we are continuing to see. And at the start of this year, vis-a-vis late last year, they also announced plans to move their B35 mandate up to a B40 mandate. For 35, the numbers behind those numbers, it started as a B15 mandate anyway around 5-10 years ago. And the idea behind those numbers is the percentage of CPU, which is essentially in the mix for their biodiesel drives. And so that means that they are now saying that they want to use an even larger portion of their crude palm oil to essentially convert into biodiesel for their local energy demands.
Okay, great stuff. Let's move to, because you've covered the global side, you've talked Russia, Ukraine, you've talked Indonesia, Malaysia, and the like. Coming to Nigeria, I think you've increased your price forecast. If you look at the average crude palm oil price forecast for Nigeria, looking at 2025, 1.78 million per ton from 1.55 in 2024. What's the triggers behind your higher price forecast for Nigeria?
Oh, okay. So the history of palm oil is quite an interesting one. I mean, there was a time when we were outrightly the largest producer of palm oil in the world, but as a result of lack of interest, lack of investments, and many other issues, we have seen our output actually come down significantly. And then between then and now, the demand for crude palm oil in Nigeria didn't exactly stop growing. Population increase has also continued to drive demand. So even though we continue to be one of the largest suppliers or producers of palm oil, there is a supply gap, and that means that we still need to import a large percentage of our CPU demand. And so what that means is we are essentially at the mercy of global CPU prices. And like I said, CPU prices are forecasted to continue to remain higher this year in dollar terms than what we had last year. And when you now add on top the fact that average exchange rate for last year, though we're starting to see less volatility in exchange rate market, but average exchange rate last year versus this year, we are expecting average exchange rate for this year to be higher than what we had last year. So what that means is that CPU prices in Naira would likely be higher, and that's how we arrived at the 1.7 million metric tons 1.7 million naira per metric ton price.
Fantastic. So essentially, so Nigeria is still import dependent, because we can't meet up with domestic demand, even though we are the largest producer on the African continent. Can we get that top 10 list again? Let's put up that top 10 list. So my next question is to you, actually, is to go back to that. Yes. Oh, you know what? You even mentioned Brazil and Argentina, right? Earlier on. Yeah, so Brazil is 600,000, they're 0.75%. They're number 8, Cote d'Ivoire number 9, Honduras number 10. Okay, back to Nigeria, right? Why can't we meet... This thing comes up every single time, whether it is sugar or it is maize or it is whatever it is, we just cannot meet up with domestic demand. Is it as simple as the population is just too large? Why can't we meet up with domestic? What's the issue?
That's not the case. We have quite a number of countries that have larger populations
and even
less arable land than us. But for palm oil, I think the major drag has been the fact that a large percentage, about 80% of producers of crude CPU farmers are smallholders, small-scale producers, subsistence farming, if you will.
Yeah.
So what that means is essentially most of their methods of productions are historical and very, very crude and primitive. It's 2025, and we still have a large percentage of producers using very old hand-milled methods of extracting.
I mean, look at these guys.
Exactly.
Look at the video. Look at what,
So what that means is there's a limit to which these guys can really produce. And even if they have intentions of expanding, there's a limit to the capital they can raise. There's a limit to even the technical know-how that they can bring to the table. Versus, say, the Seat, the Prescos and Okomo, who essentially have been in the industry for a while, who are much larger than these guys and even have global expertise to rely on. And that's why the supply side of things in Nigeria continues to be a drag. And so the solution there would be if we can implement, maybe the Bank of Agric, for example, can have a drive and ensure that there's enough an adequate capital just to these smallholder farmers. And then it can also be a re-education and a realignment to them so that they would know that there are better methods of getting this CPO out of the fresh fruit bunches that they harvest, and then also let them know that they're also better and more reliable seedlings. There is also quite a number of agricultural advances that can be brought to bear to drive up these production numbers.
It is the same narrative.
Story.
Yeah, it's always these subsistence farmers, most of them pretty much making this stuff for themselves just so they can survive. They're just using older methods that are just not able to boost output. You did mention Presco and Okomo, both publicly traded firms on the NGX, on the exchange. There are players in that sector. I think we got a chart where you have projections for the local, there it is, for the local players. So I guess it's intuitive, right? With everything you've talked about, with the gap, that means they have room to grow in terms of production,
Absolutely.
right? So talk to us about that for the two of them.
Absolutely. And for both of them, they have actually pursued quite different strategies. For Presco, what we saw was an inorganic form of expansion. They recently, not just recently, even before then, announced the acquisition of an SNL, Snart Nigeria Limited, which is essentially a sister company, but they have been growing their base and capacity by acquiring small farms where they can, and that has really helped them to expand production. But for Okomo, they have more or less also been expanding, but their strategy have been more focused on optimizing the assets that they have, trying to ramp up capacity rates, trying to ramp up efficiency in terms of the oil mills and even in terms of the farm FFB ton per hectare that they can harvest. And that has been the strategy that has supported them. Though both of them have different strategies to drive growth, but it seems to be working for them, and we expect more of the same going into the year.
Fantastic. Now, there is a chart, the EBITDA margin, which is earnings before interest, tax, depreciation, and amortization, right? You have a much higher margin for Presco than you have for Okomo. And can I relate that back to the methods you just talked about for the two of them?
So it's a combination of how they have decided to drive their expansion, and also a function of the business model that they both implement. For Presco, for example, they, after getting the FFB, that's after harvesting and milling out the crude palm oil, they also take it a step further and refine the product into RBDO and oleum and more. And these refined products have a higher margin, which then enables them to get in more units of revenue per unit of produce, right? And it's just similar to, say, an crude oil producer that sells crude oil and another one who takes it a step further and refines their crude oil. They're able to drive a higher margin. That's essentially the difference in terms of EBITDA margin forecast for both of these players. And I mean, quite frankly, crude palm oil is an in-demand commodity, and the non-refined has also worked for Okomo. Even across the past 5 years, they have one of the best share price performance, both with Presco, despite the fact that they don't have to essentially refine their crude palm oil. So to each its own, but it's working well for both of them.
Fantastic. And so I guess, I'm not going to get into the stock picking part, but the sector looks attractive as far as the two of them are concerned.
Absolutely.
In terms of their stocks along to buy.
Yes.
Kayode, this has been a very informative session, and I'm glad you joined us. You guys at CardinalStone putting out really informative reports. Kayode Eseyin, lead consumer goods and agriculture sector research at CardinalStone Research. Thank you very much for the deep dive into crude palm oil. Appreciate your time.